Hey, it's Chelsea with the Bond Group at RE/MAX Results in Fort Wayne, Indiana. Today I wanted to talk about the different types of loans that are out there. I know that there's so many, it can be very confusing for people, especially when it comes to first-time home buyers. So I asked my friend Greg Thomas over at FWHOMZ Mortgage to send me some information on the different types of loans that are available. So this is the information that he sent me, which I've also posted below. Thank you so much, Greg. I'm not going to go over all of it today just for time reasons, but I want to start off with conventional loans. A conventional loan you can get up to $417,000. You have to have 3% down, and it has to be your own money. You can't borrow it from anywhere. You have to have at least a credit score of 620, and the seller can pay up to 3% of your costs. If you have questions about this type, you can contact Ken Vaughn or you can contact Greg Thomas. The next loan I want to talk about is an FHA loan. You can get a loan for up to $271,050 as your base loan amount. You have to have 3.5% down payment, but you're allowed to have this gifted. You have to have a credit score of at least 640, and the seller can pay up to 6% of your costs. Now, if you like the FHA loan, but you have a property that needs a little bit of renovation, like new carpeting, paint, cabinetry, things such as that, you can get what's called an FHA 203K. Now, you can get up to $35,000 financed to repair the property. They have to go over it, and it has to be eligible before they make this decision, but you have to have a 3.5% down payment, which is the purchase price plus the cost of repairs, and the seller can pay up to 6% of the costs. Next, I want to talk about VA loans. Obviously, to be eligible for a VA loan, you have to be a veteran. You can get a VA loan for up to $417,000, and it's 100% financing. You have to have a minimum credit score of 640, and sellers can pay up to 4% of the costs. The next thing I want to talk about is a USDA loan, which is really cool. We got a lot of people asking about USDA loans because it is 100% financing. It does have to be in a USDA eligible area. If you want to know if the property you're interested in is in a USDA eligible area, you can always contact Ken Vaughn or you can contact Greg Thomas. Your credit score has to be a 640. And closing costs can actually be financed into this loan as long as the loan amount doesn't go over the appraised value of the home. Next, I want to talk about a couple different types of IHCDA loans. IHCDA is Indiana Housing and Community Development Authority. The ones I want to talk about is the IHCDA Next Home program. There's a conventional one and an FHA one. For both of these, you have to use the loan only if you're going to use the home as your primary residence. You can't get the loan if you're going to rent the home out. So first, conventional Next Home program. It has the same property guidelines as a traditional conventional loan. You can get 3% down payment assistance from the state of Indiana that's forgiven. You don't have to pay it back after you've lived there for 2 years. You have to have at least 650 as your credit score. And you get reduced mortgage insurance with this one as well. And the seller can pay up to 3% of the costs. Now with the IHCDA Next Home FHA loan, you get 4% down payment assistance from the state of Indiana that's also forgiven after 2 years of living in the home. You have to have at least 650 as your minimum credit score, and the sellers can pay up to 6% of the costs. I hope this cleared up any of the questions you guys have about the different types of loans. Obviously, if you have any questions, please feel free to contact Ken Vaughn. His phone number is 260-413-9416. You can text or call him anytime. Or you can contact Greg Thomas. He's great. We work with him all the time because he knows what he's doing. Thanks again, guys.